So, October's been quite a month for Bitcoin and its crypto friends. So much so, BTC clocked in better than a 30% jump from 27,000 in just the last few weeks. And while many are looking at the recent bad news as a reason for lower prices, I expect the rally to continue through November, and I want to show you exactly why. Hey everyone, Tom Gentile, America's Pattern Trader, and it's amazing what a month can do. Look, just a little over a month ago, we were stuck in the mid 20,000s for BTC, and suddenly a hint of good news sends it up 30% in just 10 days. The news I'm talking about involved Larry Fink and BlackRock. Now, if you know or you don't know, back in the middle of June, BlackRock filed for SEC approval of its first Bitcoin ETF. So, what makes this ETF different than the dozen or so crypto ETFs such as Bido that are already out and trading? Well, for the last 10 years, applications for a physically based ETF have been denied. So most companies opt for a futures based ETF. That's because Bitcoin futures were trading at the time and it looked like an easy go and easy approval. And it was for many of these companies. The problem with these ETFs is that they're derivative based. What that means is that they trade off of futures contracts, and between the management fees and something called contango, where they're constantly buying futures contracts every month to support the amount of volume in these, they weight against the long-term investor. What that means is that, and you'll notice if you're a holder of Bido, sometimes when Bitcoin goes up, Bido will go up maybe not as much. Or if Bitcoin's going sideways, Bido could be off. More importantly, if Bitcoin goes down, Bido could go down quite a bit more in percentage value. That's why I never suggest that you buy these for the long term because of these reasons. Now, BlackRock's applying for a physical ETF. What that means is that their product, they're looking to trade off the spot or the actual physical price of Bitcoin. Now, imagine if this gets approved. They're going to need Bitcoin to be held in trust for all the folks who are buying their ETF. I think it's massive. And all they need is approval. And think, by the way, I believe this is correct, 256 and 1. That's his record for getting approval on ETFs. The one that he didn't get approval on, I think that was over a decade ago. Meanwhile, on the other side of the news front, SBF, well, he was found guilty on all 7 counts of fraud related to the FTX scandal. Now, as we await sentencing, this all continues to be a stain on cryptocurrency as far as the public is concerned, because as they continue to broadcast this news on mainstream media, it doesn't sound good when the average Joe is listening to it. Now, it sounds like a negativity for the industry, but remember, this is good news because those that hold BTC and that have held it through this year, well, they got to be happy it's going back in the direction that they want it to go in. And it's been widely said that when bad news is out and something stops going down, that you've weeded out most of the sellers. So think about this. In the last year, we've seen the collapse of Celsius and Luna coins and the destruction of FTX. All of that happened in 2022. What did Bitcoin do? Well, it fell down hard first. Then it fell again. Then it fell a third time, but it fell to meet the support point 3 times, basically a triple bottom. So when the FTX news came out, yeah, it hurt the industry, but it didn't hurt the price of Bitcoin any more than Celsius or Luna did early that year. Has winter finally come and gone for this multi-year cycle of BTC? Let's take a look at the charts. So the chart you're looking at right now is a chart that's taken off of tomsoptiontools.com. And this is a 400-day chart. Takes us all the way back to October of 2022. Now, in October of 2022, Bitcoin was trading around 20,000. There's the FTX collapse that you see and how we dropped down just below 16. That was now the third drop down below the 16,000 mark for 2022. The others you don't see because they're not on the chart. But since then, we have seen nothing but higher lows and higher highs. First, a high to 24,000. That was back in February. Then in April, we jumped to 30,000. And then again in June, we jumped to right around 30,000, maybe a little bit above. Finally, to what's been happening recently, the jump up to 35 and just above 35,000. Now, what's to come that could make this coin jump even more? Halving. All right. So to understand halving, you need to understand block rewards. Block rewards are awarded to currency miners who are the first to begin to solve a complex math problem, and that creates a new block of verified Bitcoin transactions. Now, prior to 2013, each miner was rewarded 50 Bitcoins when they solved that complex problem. So what halving does is that we get to a point where you've mined so much coins, so you can only now reward people with less. So 50 became 25, 25 became 12 and a half, 12 and a half became 6.25. And in April of 2024, the reward will only be 3.125, a mere fraction of where we started just a little more than a decade ago. And that's because of the 21 million Bitcoin to be mined, over 90% are already in circulation. Now, they say that last 10% is going to take a while to get to. And in fact, the final reward will go out to a miner, but it's not going to happen until 2140, over 100 years from now. So that brings me to my projection for BTC. And for that, I need another chart. So I'm going to take the same chart we just had, and I'm going to add some information from it. Some math on the chart you see now shows a wide triangle that starts around 19K, and then it pushes into resistance around 31. And 31, we had pushed resistance a couple of times, again back in April and then again in July. Well, guess what, folks? We jumped above the 31,000 resistance just a couple weeks ago. If you take 19, which is the floor, and add 31 to it, which was that recent resistance, that gives us our new resistance point at, you guessed it, 50K Bitcoin. Now, this is very possible due to everything I just discussed in this video. So even when the market was dropping in October, Bitcoin finally decoupled itself from the market and went from being an asset of the markets to an asset of uncertainty, moving up while the stock market was moving lower. This is exactly what it was created for in the first place. And with last week's charge to 36,000, yeah, that might have been a false start. Everybody pulled back to 35 again, and we're waiting for the gun to go off for higher prices. We've been pushing that 35 number for the last few weeks. So my question to you is this: has the breakout begun? And if so, where do you see Bitcoin going and when? Leave your comments below. I'd love to know your answers and opinions on the subject. And I'll be with you again later this week with Chris Johnson. I'll see you then.